Hi guys, thanks for tuning in to another episode of Nuggets News. Today we've got a friend of the channel and that's Andre from 1 Minute Economics. How you going, Andre?
Doing great. Thanks a lot for having me on.
Our pleasure. Now, some of your videos, I'm just going to bring them up for the viewers here. They've been watched nearly 3 million times and you try to simplify things for people in around that minute mark. So some of your favorite videos of mine, supply and demand, inflation, deflation, the GFC, pyramid and Ponzi schemes we're going to talk about as well. So what's your background, mate? You've got a degree in economics, so you're not just one of these people that's taken to the internet with your sort of theories.
I like to tell people that I put a reasonably good balance on the table between book smarts, where anything from bachelor's to PhD in economics, great, perfect. So I have that dimension as well. But I also put I think, a serious degree of street smarts on the table because I'm not the type of economist who just reads a gazillion books. I do, of course, but I don't just limit myself to that. I'm not the type of person who just reads a bunch of books and then regurgitates the stuff you read and that's my message. No, instead, I'm usually the guy you can find in the eye of the hurricane. Like, for example, I specialize in exotic assets and I don't just read up on them. I'm there. Like, when I write about domain names, like, I think I'm the only economist who covered the short domain mania of 2015 to 2016, where like certain domains with Chinese appeal that you could have had for $8 in 2009, 2010 ended up going for 2000 plus in December 2015, January 2016. So I was there, but I was not just there, doing a bit of research. I was also there buying and selling these things. The same way when I talk about crypto, I'm talking about crypto from the perspective of an economist who also buys and sells crypto, from the perspective of an economist who occasionally, watches his sanity get washed away by trading crypto on leverage. I do that as well. So
Yeah.
I think this kind of perspective gives my content a bit of additional authenticity.
Awesome. So today we're going to really focus on how we think Bitcoin and crypto will hold up in a pullback. I hate to say a financial crash because I don't like those attention grabbing headlines, but I think it's a very interesting topic because Bitcoin sort of came out of the GFC in 2009 and it hasn't been around for that full market cycle yet. So a lot of people are sort of saying, well, is Bitcoin going to sell off? Or is it going to act as that uncorrelated asset and a little bit of safety for people? So, do you want to talk about your thoughts on that in general and maybe gold, which sold off with everything? And I think that's got a bit more of an attachment to the market and then sort of rallied afterwards as that safety play. So, do you want to talk about all your thoughts on this?
Yeah, I mean, as you've mentioned, not even BTC has been around for a full market cycle. And when it comes to crypto, I personally feel people need to understand we're at the stage in the game where we can no longer just say crypto in a way that encompasses everything. So I think what we need to understand is that there are at least two dimensions if you want to look at crypto from the perspective of the next crash and how you should be positioning yourself. Because on the one hand, of course, we have the best of the best in terms of crypto, and especially Bitcoin, which initially has been, as we all know, adopted by people who wanted to basically hedge against financial uncertainty, people who stopped trusting central banks, who stopped trusting the banking system, the financial system, and so on. So, in a way, Bitcoin was initially adopted as a hedge against financial uncertainty, as time passed, it also became clear that there's a decent correlation when it comes to the price of Bitcoin and especially banking related uncertainties with episodes like Cyprus in 2013, all the drama in Greece and so on. So there's some decent meat there. On the other hand, however, as the price of Bitcoin went up and as crypto prices went up as well, there's the other dimension of the crypto world, which is, that of, if you will, a casino space where people come not because they want to hedge, not because they necessarily believe in the technology, not even necessarily because they care about the technology. They just are in it because they see everyone else making money and they want a piece of the action. This is in no way unique to crypto. People have been doing this, especially we do tend to get crazy when it comes to technology related stuff, whether we're talking about the dot-com bubble or, I don't know, even the real estate manias in the United Kingdom in the 1800s or whatever. This is not new, but we do need to be aware of those dimensions because Of course, let's assume that there would be, I don't know, a loss of confidence in the banking system, or just this major shock. The average person might say, okay, I'm hearing news about banks closing down in various countries, or I don't know, things that are generally making me uneasy. So maybe it would be a good idea to have some exposure to Bitcoin, for example, because hey, nobody can take it away. Nobody can close down the bank of Bitcoin because there isn't one. So there are advantages to that. Will the same person say, yeah, everyone's losing their jobs, the banks are closing, let me just invest everything I have in Dentacoin?
Yeah.
I don't necessarily see that happening. So this is, I think, the core of it all. In a way, I do believe that there are premises for the best of the best in terms of crypto, so Bitcoin and the few alternatives, to act as the hedge they were initially adopted to be.
Yeah,
I do believe there's a decent likelihood of that happening, but, and you've mentioned precious metals as well, people need to also accept the fact that, for example, something similar to what happened to precious metals after the Great Recession might happen in the crypto world as well, in that initially the reaction might be a severe correction, a crash, until the market kind of digests what's happening and realizes, no, we want these to be a hedge, and the price is then going to go up. So people need to be aware of that, and should there be a potential shakedown of that nature, they just have to, it should catch them off guard, I feel.
Oh yeah, you've raised some great points. So the first one I want to touch on is that we do call all of this crypto, yet Bitcoin might be doing something, and in the future when these assets mature, all the individual applications and blockchain-based projects, maybe they're still trading correlated. Maybe they're doing their own thing by that stage, which would be fantastic. And a lot of people will be able to use stable coins. That all falls under that umbrella of crypto. But the outcome, when people say crypto is crashing, it can be very different to different people. But
Exactly.
The thing that I wanted to explore with you was, when gold crashed, I'm of the belief, and I'm looking forward to hearing your thoughts, that at the time, everyone was desperate for liquidity. So people getting margin calls, and everything's traded with bots and algorithms these days. So that's why a lot of people just had to sell everything to get those margins, and they're automatically getting liquidated. And that's why I think gold stocks, gold ETFs, everything is sort of very highly correlated in terms of people just needing liquidity. And that's what caused that initial knee-jerk reaction during the panic. But I don't know if that would happen. We've got talk of a Bitcoin ETF, but is Bitcoin really going to be sold by a lot of people that need liquidity as much as gold was in that initial knee-jerk reaction? I really think it's a separate marketplace, very globally separate to what might just be happening in equity markets.
Well, on the one hand, there's obviously that distinct possibility that people are going to sell some BTC to cover some losses or to meet certain expenses or whatever. Of course, that's a thing. However, should Bitcoin act ultimately as some kind of a hedge, even at these market cap levels, the space is small enough for even something like, let's assume there isn't a global banking crisis. Let's assume there is a banking crisis over in Italy, for the sake of our example. So, not global, but a decent enough economy, certainly larger than that of Cyprus. Even that level of influx of capital would be more than enough to kind of, have a positive impact on the price of Bitcoin, because this is what people tend to say. People tend to say, and I hear this a lot, that the market cap of Bitcoin is high, and of course it's high. If you look at the number, that's a high number. It's a high. Nobody can debate that. But then the same people talk about institutional investors. They talk about, yeah, J.P. Morgan Chase is going to be involved, and what they don't realize is that Bitcoin is great in terms of liquidity and market size for you and me. Like if we have $10,000 burning a hole in our pocket and just want to market buy a bunch of BTC, then we can do so without making a dent in the price. But if Goldman Sachs says, I have this $10 billion burning a hole in my pocket, let me just market buy Bitcoin, then there's going to be a bit of a problem. And people need to understand that the two things just don't go together in the
Yeah.
same paragraph. For institutional investors to become meaningfully involved, so to allocate a decent amount of their capital in this direction, the market cap would have to be a lot higher. Oh, of course, they're opening up trading desks because they're kind of dipping their toes and seeing if there's potential there or what exactly they're going to do. But at these market cap levels, they have a dilemma such as, if I genuinely get involved, I kind of become the market, and it's a tricky position to
Oh,
be.
yeah. And just to explore that a bit further, I think the percentages are that gold has never been less owned by, hedge funds and institutions. I think it's less than 1% of the average investor's portfolio. Now, Bitcoin, and that's with a market cap of $7.7 trillion. So we're talking about Bitcoin with a market cap of around 100 billion. The percentages would be, 0.001, something just crazily small. So even if they decide to hedge 1%, as you say, we're talking astronomical numbers in market cap for Bitcoin, let alone if they need to hedge 5% in gold. That would send gold to $5,000 or $10,000. So any thoughts to expand on that further?
Well, yeah, for sure. Like when it comes to crypto and gold, I don't think necessarily there's a war between them, because I see this a lot on the internet, especially even on my channel on 1 Minute Economics. We have this tendency of people to pick a side, like, oh, if you like crypto, you have to be against this barbarous relic that is gold. And that's just silly, On the one hand, of course, in certain situations, let's assume you live in a country like Syria and are forced to leave the country. It's awesome that you can do so without having anything physical on your person. You just remember a string of words and you can take your wealth with you. Whereas if you had, a bunch of physical gold or silver in your pockets and had to do that, it might be a problem, getting confiscated at the border or stolen from you or whatever. So there's that. On the other hand, if, for example, I'm also active in the domain industry, if something like a severe fragmentation of the internet occurs, or if for one reason or another, it doesn't even matter why, people lose access or have severely limited internet access, in that case, I would definitely love to be holding some physical precious metals. So I feel, and in my book I highlight this as well, I feel that people need exposure to both. And especially, I'm not quite ready to add to my portfolio when it comes to precious metals right now, but I do love seeing that everyone hates them, because when everyone starts hating them a little bit more, I think I'm going to get some. So.
Oh, I think that's a great point. And good investors don't fall in love with anything. There's going to come a time where maybe Bitcoin and crypto gets extremely overvalued in the next big bubble. And like you said, I've got a few gold stocks that I picked up sort of near the lows, and Australian gold miners have performed really well. They pay a dividend. It's uncorrelated. I love that little part of my portfolio. But there might come a time where crypto runs and everyone is calling gold, completely useless. It's no longer needed. And again, that's why we focus on the channel on sentiment. I'll bring up the chart of, the stock market in 2008. Once it gets down there to that level around 666, all the technical indicators are extremely oversold. There comes a time where, love or hate stocks, maybe it's time to buy just because they're so beaten up. And I think that becomes, flexible investors are good investors.
Yeah, for sure. You cannot afford to be a one-trick pony, especially if you want to position yourself properly. This doesn't mean you have from now on to just worry about financial stuff all day. Because I run 1 Minute Economics. If there's someone who respects people's lives and the fact that they have other stuff going on, not just business, economics, finance, whatever, it's me. But at the same time, I do say that you have no excuse not to think about these things. You need exposure to different asset classes. Which asset classes are good in your, if you live in a politically unstable country and are only a regime change away from losing your real estate, then I'm obviously going to be less willing to recommend real estate. It's on you to figure out which assets these are, of course. And I kind of do my best to help people do that. But don't be a one-trick pony. Just, don't.
Fantastic. So we could talk about that all day, but I do want to move on. And one of those videos that I mentioned was your coverage of pyramid and Ponzi schemes. So in this crypto space, it's absolutely rife. We've already seen, in my time, in 6 years, I've probably seen 3 or 4 big ones blow up. And each time we get a new wave of investors and they say, no, it's not a pyramid scheme. It's not a scam because they pay out. They've been paying me out. I've been in it for a year. How do you explain to people, what are the points to get across, the red flags to recognize? Why does this continue to attract people to the space?
Yeah, well, first of all, partly due to those scams you've referred, two of my popular videos are actually one about pyramid scheme and Ponzi schemes, and one about pump and dump schemes. So it's truly remarkable. And strangely enough, I have people in my video about pump and dump scheme pushing their pump and dump channels or whatever. They have these pump and dump groups, and then they just spam my comment section in that video because it's popular. They spam it with a link to their pump and dump group, and I'm like, okay, ironic much. So
Yeah.
it's a huge thing, and I'm glad you touched on the idea. Like a lot of people have this way of thinking, hey, they're paying, so they must be legit. Well, of course not. There's this guy Bernie Madoff who paid people for a very, very long time, and but at the end of the day, when there's this delusion involved, especially since many of these pyramid schemes, they don't just come with, okay, this is what we do, we're going to give you more money, invest in. No, they pitch a dream. They pitch, invest in us and you're going to change your life, and it's that particular dream that gets people hooked, and then these people start making excuses for themselves. Because I'm sure if you're someone with at least a basic dose of common sense, if you're someone capable of critical thought, then you're going to look at many of these programs and you're going to be like, yeah, come on. But on the other hand, every fiber of your being wants this to be your big shot. It wants it to be, this major opportunity that's going to change your life. So maybe I'm wrong. Maybe it's not so bad. Hey, look, they're paying. Hey, they're paying. Let me just focus on that and tell everyone, how legitimate it is, and all that, everything that everything that matters is that they're paying. And it's this perpetuating cycle of deluding yourself because you so desperately want it to be true that gets people hooked.
Yeah, no, I mean, it is sad to see it happen, and we've met people that were, innocently roped in, and they've had to break the news to their friends and family that they've signed them all up for a pyramid scheme, and, maybe they do get out, but everyone below them, and they've wrecked 10 relationships in their life. So, guys, just be so wary, take everything with a grain of salt. So, we could talk all day, but we will wrap it up there. Andre, so how can people follow your work, get more information and all that?
First of all, thanks again for the opportunity. They can check out my newest book, which is called, I'm just gonna show it real quick, The Age of Anomaly. It's basically a book. I mean, people know me from One Minute Economics as this balanced guy who presents well-researched opinions, but I am worried about the economy. I am worried and downright terrified when it comes to some things. So I would assert that when someone like myself becomes worried, it's good to at least pay attention. So kind of like to give as many people an opportunity to get it. I'm having a promo when this video is going to go live. So if you buy it until Sunday, you can get it. It's like 400 plus pages for 99 cents. The digital version, of course. And also you can find me on 1 Minute Economics, youtube.com/1 Minute Economics. And during this week, I'm having a pretty big contest to celebrate the launch of my book. The number one prize is 1 BTC, but I have lots of smaller prizes as well. So even if you don't win the big one, there's a high likelihood that you're going to win something like a $100 Amazon gift card or domain plus hosting packages or stuff like that. So a lot of people are going to win something. And yeah, that's pretty much it. To know what I'm up to keep in touch with my latest videos, just search for 1 Minute Economics on YouTube and you can't miss me.
Awesome. I'll put a description to all that below, guys. So thanks again for joining us today, Andre.
Thanks a lot. It's been a lot of fun, and I genuinely hope people were able to derive a lot of value from our conversation. Take care, guys.
Thanks, guys. Cheers.